Hey everyone, this is Teresa Guthrie. Welcome back to another video on Catch You on the Pip side. Thank you for watching. Feel free to press subscribe down on the right-hand corner here to get some more trading tips. Today, we are just going to review a trade that we took this morning on our live trading call, Scalping US30, using the boss candle strategy. So this morning, our trading session starts before market open. So the stock market opens in New York at 9:30 a.m. Eastern Standard Time, 7:30 a.m. Mountain Standard Time for us. And so market open today was quite volatile. Normally, we start looking for trades only maybe 4 or 5 minutes after market open, but the volatility from market open continued a bit longer today than normal. There was lots of candles with big wicks on them and just a lot of volatility overall. And the first trade of the day that we possibly were interested in taking, I was looking to see if we would get price to come up counter trend towards these EMAs and possibly give us an M so that we could get an entry for a reversal of price up here. Now, unfortunately, what ended up happening is that price pushed up and it did give us right here a bearish engulfing boss candle. So this candle pattern here with these two candles, this was a bearish engulfing boss candle, but we were looking to get a M first so that we could see that price was ready for a reversal, and instead price just dropped. So this is what we refer to as a V bottom, when price just goes up and goes straight down without retesting the high and giving a second leg of an M. So this was a valid entry. This is a bearish engulfing boss candle and could have been used as an entry, but I was looking for more confirmation that price was ready to reverse. And then this next candle dropped so fast that it was already so far into profit, before we could have entered anyway, so it would have been a late entry. And then there was eventually, the TDI did shift down. On the TDI, the green crossed over the yellow. Potentially somebody could have used that as an entry. To me, it had already dropped so much and was approaching these lows here that I wasn't sure if price was going to take them out or not. That again, that would have been a little bit of a riskier entry, just not knowing if these lows were going to get taken out or not. As we can see, it did blow through it, but hindsight is 2020. It's very easy to look back and say, oh, I should have entered right there. Look at all the money that I would have made. So anyways, for me personally, I didn't make any money off of this beautiful looking push down here. Possibly some people on my call may have, because we do sometimes take entries on the first leg of an M. In some situations, this just wasn't a place that I was looking for it personally. But anyways, it dropped obviously very nicely. So potentially somebody could have made a lot of money on that little push down there. But then once it started to reach the bottom here, if you pay attention to the TDI, so the TDI is the bottom section of my chart here, price, which is the green line, had pushed itself down below the 30% level on the TDI. So this is all marked out in percentages with different levels. And so 30% is where we consider price to be oversold. So as price got down here, we start to get interested in a buy. Now, the only thing about buying in this situation is that this is counter trend. Anytime you're entering a trade where on the time frame you're looking at, you're trading asking price to go back up towards the EMAs, it's counter trend. Now, the stock market or US30 or the Dow Jones Industrial Average overall is definitely bullish. It's been on a bullish run for a long time. The daily time frame, 4-hour time frame, etc., even the 1 hour are still bullish. But on the 1 minute time frame, this would be counter trend. So what we're looking for here is once price gets down and it's oversold, as long as we're willing to take a counter trend trade, which I am, you're looking to get a W off of the bottom of where it's at the 30% level. What you like to see is one leg of the W being outside of the Bollinger Band, which we have here, right? We can see the green, which is price, is outside of the blue, which is the Bollinger Band, and it makes the first leg of the W outside. And then you like to see the second leg of the W inside of the Bollinger Band, which is what we have here. If you have your TDI too shrunk, it sometimes can be hard to see the W. To make it easier to see, you want to stretch up the price levels or on the right-hand side of your chart, and it makes it easier to identify the W. You can also identify the W on the actual chart itself with the candles. You can turn on your trend line drawing tool and then lock your drawing tool. And if you just simply draw a line down to where it made a low, draw a line back up to where it set a high, draw a line back down to where it retested the low, but failed to take it out. It's very important that the second leg of the W is not lower than the first leg. But it is okay if the candles are lower than the first leg, if the second leg of the candles is lower than the first leg, as long as on the TDI, the second leg is not lower than the first leg. So the TDI trumps the candles. As long as the second leg of the TDI does not take out the first leg, you're still good to go. Okay, so in this case, it doesn't take it out in either spot, so it's a valid W. And then we're looking for price to start moving up because a W or a double bottom is a reversal pattern. So this is what we're looking for with the W. Bear with me for a second. I'm just going to erase these lines, and then I'm going to show you another way for newer people to see the W that can be a little bit easier. When I was new, I did find it tricky to identify the W's at first. So another option is to switch your chart from a candle chart over to a line chart, and then it becomes easier to see the W as well. Okay, so there's another tip for you for finding the actual W itself. So once we have this W, then we start looking for entries. Now, in this case here, we actually, again, just like in our example at the top here, we did also have an entry on the first leg of the W here. So this is a boss candle. This is a bullish engulfing boss candle. Now, when I'm looking for a counter trend trade, generally speaking, I really want to see a W so that I have extra confluence that it's ready to reverse. Sometimes I will take an entry on the first leg of a W or an M. Normally when I'm doing that, it's already like it's extremely overbought or extremely oversold. So this is oversold, but I wouldn't call it extremely oversold. If it was down at, say, the 20% level on the TDI, and I seen an entry on the first leg of a potential W, I may take it. Okay, but in this case, I didn't. In this case, I was waiting for a second leg to enter off of. Now, so we can see price came down, it made the first leg push back up, and then price pulled back down, and then it gave us a second leg, a second entry on the last leg of a W. Now, this entry here varied greatly from chart to chart. So on certain brokers, this candle was engulfing, and on other brokers, it wasn't engulfing. So this wasn't the easiest decision, simply because it wasn't necessarily engulfing on every single person's individual broker that they use. Nonetheless, for this example here, I'm going to mark it up. So when I put a Bitcoin B, so for me, this Bitcoin B is a boss candle B. So it's my way of identifying the candle that is the boss candle that is doing the engulfing. So this is another bullish engulfing boss candle. And the reason that it's a bullish engulfing boss candle is because it is engulfing the candle, one candle or more to the left. Okay, so this is an engulfing pattern to the left. Bullish engulfing boss. So I'm using a Latin America keyboard for the first time in my life, and it is tricky for me to type on because it has extra letters for like the N in Spanish. Anyways, my typing's very slow. So once we've identified our candle, the next thing we need to do is to draw our trend-based fib extension. Now, the trend-based fib extension is always drawn on the boss candle, regardless of what type of boss candle it is. It's always drawn on that candle. So we come over to our tools on the far left-hand side, and we find our trend-based fib extension. And what we're going to do is we're going to draw it from top to bottom because we're looking to buy. So we want to find what the lowest price of this candle is. So if you put your mouse over any individual candle and then you look up here, you can see open, high, low, close. Okay, it gives you the details of each candle up here. And so this information is valid when you have your mouse over a candle that you're interested in looking at. So the first thing we're going to be looking for is the low of the candle, because that's going to be our first click. So if you put our mouse over this candle and we look up where that arrow is pointing, we can see that the lowest point of this candle is 35979. So I'm going to line up the first click with 35979, and I move my mouse one candle to the left of the boss candle for my first click. Now I'm looking to click on the highest point of the candle, including the wicks. So again, I put my mouse back over top of the candle and I'm looking for the high, which is 36,002. So I find that price level, and then again, I move my mouse one candle to the right of the candle and click. Okay, so that's my second click. Now my third click is going to be back down to the low of the candle. If you forgot what it was, you can cross back over the candle and pause and then read it again, 35,979. So 35,979, again, I move my mouse one candle to the left and I click. And that gives me my trend-based fib extension, which gives us our 4 different take profit levels. Bear with me for a second because I'm just going to quickly highlight them in green so that you can read them a little bit better on the recording. Okay, so there's our take profit 1 level. So while I'm doing this, I'll also highlight the fact that this trade is counter trend, which we already talked about. When we're trading counter trend, our first target is always the aqua, because price may only want to pull back to the aqua, and then it could bounce off the aqua and continue back down with the trend. So our first target is the aqua. Now, if we look at our 4 different take profit levels on this trade, what we can see is that obviously we can see that the aqua is below our take profit 4. So when we look at this trade, it's not a good idea to set take profit 4 in your phone and walk away from your phone for the day and expect the trade to hit that take profit, while you're not watching. In this example here, our TP2 is just below the aqua. So if you were going to be not watching, oops, I labeled it TP1. If you were going to not be watching this trade, you would want to set no more than TP2 as your take profit, but you need to pay attention as this trade is running to make sure that the aqua doesn't move down below your take profit 2 before price hits that level, because or else you might have to adjust your take profit to be even lower. Now, me personally, when I'm trading on the 1 minute time frame on US30, I don't leave my computer. And so I'm watching the trade the whole time. And I very rarely actually set a take profit in my phone. What I do instead is I use a trailing stop loss once price is getting close to the aqua, so that if price does break through the aqua and continue up, I get to stay in the trade. And if it rejects off the aqua, I have a trailing stop loss in place so that if price pulls back too far, it takes me out of the trade with what I call like maximum profit. Like I'm trying to maximize my scalping profit on each trade. Okay, so there is our 4 different take profits, and we know that our first target is going to be around TP2 because that's where the aqua is currently at. Now, the next thing we need to set is our stop loss. So our stop loss, what we like to do is turn on an indicator called fractals. It's called Williams fractals. And we turn this on and it marks your chart with all of these different triangles. What I'm looking for is for the lowest fractal low to the left of my boss candle. So my boss candle itself is actually a fractal, but I can see that just to the left of there, there's a lower fractal low. So that's the one that I would want to use. So once I've identified my fractal that I want to use for my stop loss, I turn my fractal indicator back off just because it's too busy on my chart with all those triangles everywhere. And then what I'm going to do is I'm going to again put my mouse over top of this candle and I'm going to look up and read what the low of this candle is. So the low of this candle is 35,969. Now that's the low. I want my stop loss to be spread times 2 below that. So my spread is 1.5. So I would go 1.5 times 2 is 3, so 3 points. I want my stop loss to be 3 points below this low. So 35,969 minus 3 is 35,966. So that is where I want my stop loss to be. The point of this is to try to keep your stop loss out of the reach of the dealer and below this W, because the W was set and it already tried to take out the first leg of the W and failed. So we're hoping that keeping our stop loss below those lows will keep us out of the reach of the dealer and that we'll stay in the trade without our stop loss being hit. A note about our stop loss for new people following this video that are new to following me is we only risk 2% of our account per trade. And so the worst case scenario here would be that your 2% stop loss would be hit and you would lose 2% of your account. There are also exits that we teach you that will help you minimize your loss so that you don't actually end up taking a full 2% loss. Okay, so you have your stop loss set. The other thing I'll highlight on here is where your entry would be. So if you were taking this trade using the boss candle strategy and you had enough time, you could take this trade using what's known as a buy stop. So you could set a pending order in your phone at the buy stop entry level. And then if that level was to get triggered, it would put you into the trade. Now, normally when we're trading on the 1 minute time frame on US30, you do not have time to actually set a pending order because you only have 1 minute. And so you just don't have time. So in this case, what you're doing is you're physically watching for when the candle hits the entry price line and you're just doing market execution because you don't have time to set that pending order. If you were trading on the 5 minute or 15 minute or any other time frame, you could actually set the pending order in your phone. And then as soon as price hits that entry price, it would activate the trade for you and you would be in the trade. Okay, so here you have your stop loss, you have your entry price, you have your different take profit targets, and we're aware that because we're trading counter trend, we are targeting the aqua for our sort of our take profit or where we're going to start trailing the stop loss. Okay, so we're targeting the aqua in this case. Now, as we can see, this trade played out fairly nicely for us. It went into profit right away. There was a slight pullback on this candle here, but it went into profit pretty nicely for us, got up very close to the aqua. Once it was close to the aqua, for me, I had a 5-point trailing stop loss in, so quite a tight trailing stop. So as soon as it pulled back, it took me out of the trade with my profit, and then it proceeded to pull back. We were expecting it to pull back because we thought that it might want to make a W on the 5 minute time frame. So we were expecting this pullback, but I'm not going to get into that for too much right now. But that's the reason that I was very very aggressive to trail my stop loss as price was hitting the aqua, because we were anticipating that there would be a pullback, and I wanted to grab my points while they were here. So this trade for me, I don't remember exactly. I'd have to look at my phone to get the exact numbers, but just from measuring on here, up to the aqua was about 49-50 points. I can't remember. I should go look at my phone, but I can't remember. I think for me, I was somewhere in the 40 point range of profit on this trade, which is decent. Typically for me to hit my 5% goal for the day of account growth, I need about 75 to 80 points. So this one trade was about half of what I need for the day to hit my 5% goal. So a nice little scalp here. And then later on throughout the day, we actually did take another trade that was enough to finish off that 5% goal for the day. But that's it for this video. Thanks for jumping on, and we will catch you on the pip side.